All right, let's talk about VSEC Corp, ticker VSEC. They just dropped their Q2 numbers and wow, the market definitely paid attention. But here's the thing. This wasn't just another solid quarter. Nope, this was the big payoff for a strategy they've been working on for years. So we're going to dig into exactly what happened, why this is such a big deal, and what it might mean for the stock moving forward. And here's the verdict from Wall Street, loud and clear. A pop of over 10%. You don't see that every day. So the big question is, what was in that report that got investors so excited? Let's get into it. Okay, so it all kicks off with the headline numbers. And let me tell you, this wasn't one of those, oh, they beat by a penny kind of reports. This was a clean, decisive beat on every key metric. I mean, just look at these numbers. The street was penciling in about 75 cents for adjusted EPS. VSEC came in and dropped 97 cents on the table. That's a huge beat. And revenue? Analysts were hoping for around $263 million. VSEC delivered over $272 million. That's the kind of performance that makes everyone, and I mean everyone, sit up and take notice. And it's not just about beating estimates, right? The growth story here is just wow. We're talking a 41% jump in revenue compared to the same time last year. That's incredible. It tells you two things. One, their market is hot. And two, and this is the really important part, this management team knows exactly how to execute. But here's the real story. Numbers like these don't just fall out of the sky. This was all part of a plan, a massive multi-year transformation designed to remake VSE Corp from the ground up. So what did they do? Well, over the last year, they've been making some seriously bold moves. First, they sold off their old fleet business to really zero in on what they do best. Then, they took that cash and bam, made two smart acquisitions, TCI and Turbine Weld. Both of these companies are experts in the really valuable engine repair and overhaul space, what we call MRO. And you don't have to take my word for it. The CEO, John Cuomo, said it himself on the earnings call. He called selling the fleet business the final step in their big transformation. So you see, this wasn't some minor adjustment. This was them crossing the finish line of a complete company makeover. And here is the result of all that work. Now, more than half of their revenue comes from engine work. Why does that matter so much? Because the engine aftermarket is the place to be in aviation right now. It's growing like crazy, there aren't enough players to meet demand, and that means it is super profitable. Okay, so the quarter was great, but for investors, what's even more important is what comes next. And when you listen to management talk about the future, their confidence was just off the charts. So they confirmed revenue is going to stay strong, which is great, but the real tell, the big signal, was what they did with their profit forecast. They actually raised the low end of their margin guidance. Now, let me tell you, when a company raises its profitability forecast in the middle of the year, that is a massive sign of confidence. It basically means those acquisitions they made are paying off even faster than they'd hoped. Digging into the call, there were 4 other big takeaways. First, they're changing how they handle used parts, their USM business. They're not just trading them anymore. They're using them to make their main repair business better and more profitable. Second, as we just mentioned, the cost savings from their acquisitions are coming in ahead of schedule. Third, they're doing more repair work in-house, which helps their margins. And finally, their balance sheet is in fantastic shape. Their debt is really manageable, which gives them a ton of flexibility to keep growing. So let's just recap here. We've got a fantastic earnings beat, proof that their big strategic shift is working, and a management team that's clearly feeling good about the future. That all leads us to the final piece, the next call, where we give you our take on the stock. So this is the million-dollar question, isn't it? The stock has basically doubled in the past year. Can it keep going? Is there still money to be made here? In our view, absolutely yes. But here's what you need to watch. First, they have to nail the integration of those new companies. That's job number 1. Second, they've got to ride this massive wave of demand in the engine market. Third, keep an eye out for more partnerships with the big manufacturers, the OEMs, like the deal they just did with Eaton. And finally, they need to stay smart with their money, just like they have been. If they can do all that, the path is clear. Okay, so here it is. Our rating on VSE Corp is outperform. Look, this company pulled off a really tough transformation, and they've come out the other side as a lean, high-profit leader in a fantastic market. This quarter's results and that guidance raise, that's all the proof we need that the new VSEC is the real deal. With a great balance sheet and a clear road ahead, we think there's still plenty of room for this stock to run.
And as always, just a reminder, this is not financial advice.